What's up, everyone? Major news from the Federal Reserve this month. They've just made their first rate cut since 2020. So what does this mean for you if you're buying or selling real estate in Los Angeles? Today, I'm breaking down the Fed's decision, how it impacts the market and economy, and most importantly, how you can take advantage of these changes. Stick around to find out how this rate cut could save you money on your next home. So here's the deal. The Fed just cut its key interest rate by 50 basis points, bringing it down to a range of 4.75% to 5%. This is a major shift after 14 months of keeping rates at a 23-year high, with inflation now nearing the Fed's target of 2%. They're changing gears to focus on supporting the job market and keeping the economy on track. This cut is larger than what we've seen in the past, signaling the Fed's commitment to easing borrowing costs across the board. They're aiming to keep the economy stable, encouraging spending and investment. Now, what does this mean for the real estate market? Lower interest rates often lead to lower mortgage rates, making it cheaper to borrow money to buy homes. This cut is expected to boost buyer activity as more people find themselves able to afford a home. We're already seeing positive reactions in the markets. The S&P 500 hit a record high following the announcement, and we're anticipating an uptick in buyer interest in the real estate sector. This rate cut isn't just about real estate. It's designed to help support the broader economy. With the job market still healthy, the Fed aims to keep it that way by making borrowing cheaper for both businesses and consumers. Lower rates can lead to more spending and investment, stimulating economic growth. However, the Fed is also being careful to avoid overheating the economy. They're trying to strike a balance between encouraging growth and keeping inflation in check, aiming to maintain it at around their 2% target. This cautious approach is critical for long-term economic stability. If you've been waiting on the sidelines, this could be your opportunity. A lower interest rate environment often means more favorable terms for borrowers, which can translate into lower monthly payments and increased purchasing power. Now, let's get into those numbers. The Fed's recent rate cut was 50 basis points, which could lead to a decrease in mortgage rates. Right now, we're seeing rates at around 6.53% for a 30-year fixed loan, but with this cut, there's a potential for rates to drop to 6% or even to the high 5% range. To put this in perspective, if you're looking to buy a home with a loan for $500,000 at the current rate of 6.53%, your monthly payment would be around $3,200. If the rates drop to 6%, that payment can go down to 3 Gs, saving you about $200 a month. If they dip even further into the high 5% range, the savings could be more significant. If by chance you already own a home, this rate cut could be an opportunity to refinance. Let's say you have a mortgage rate of 6.5% on a $400,000 loan with a monthly payment of around $2,530. Refinancing to a new rate of 6% will lower your payment to approximately $2,400, saving you about $130 a month. That adds up to about $1,500 a year. So even small reductions in interest rates can lead to substantial savings over the life of your loan. And if you can refinance into that 5% range, your monthly savings could increase even more, giving you more flexibility in your budget. For sellers, this rate cut can boost buyer confidence and increase market activity. With more buyers entering the market, we're likely to see increased competition for homes, potentially driving up prices. So if you've been thinking about selling, now might be an opportune time to list your property. Let's break down what these changes mean for your monthly payments. Suppose you're buying a home for $800,000 with a 20% down payment. At their previous rate of 6.53%, your monthly payment on a 30-year fixed loan would be around $4,100. But with this new rate cut, if you secure a loan closer to 6%, your payment could drop to about $3,900. And that's a savings of around $200 a month. And look, I'm no mathematician, but that's $2,400 a year. And my only question is, what would you do with those savings? Right now is the prime time to explore what these monthly payments will look like with these current rates and see how much you could potentially save. This is the moment to have an in-depth conversation with your mortgage agent. You'll want to discuss the current interest rates available and how they might change in the coming months. They can provide insight into whether it's better to lock in the rate now or wait and see if the rates decrease further. Every percentage point matters in the long run, so understand how these changes affect your payments is crucial. When you sit down with your mortgage agent, ask them to run through different loan scenarios to show how small changes in interest rate can affect your monthly payments. For example, What would your payment look like at 6% rate versus a 5.75% rate? Seeing these numbers side by side give you a clear picture of what you can afford and how much you could save each month. Another important topic to discuss is the option to buy points to lower your interest rate. Your agent can explain how much you need to pay up front to reduce your monthly payments and whether it's worth the investment over the life of the loan. It's an upfront cost, but buying down your rate could lead to significant savings in the long term. If you're already a homeowner, don't forget to talk about refinancing options. Ask about the potential benefits of refinancing at the current rates, including the closing costs and how long it would take to reach the break-even point. Understanding how much you could save on your monthly payments over the course of the loan can help you decide if refinancing is the right move. Lastly, be sure to cover the differences between a 30-year fixed mortgage and a 15-year fixed mortgage. While a 15-year loan has higher monthly payments, it can save you a significant amount of money in the interest over time. Your mortgage agent can help you weigh the pros and cons based on your financial goals. By having this detailed conversation with your mortgage agent, you can make an informed decision that aligns with your financial strategy. The right choices now can save you thousands over the life of your loan. So take the time to explore all the options and make sure you're getting the best deal possible. As your real estate agent, I'm here to help you navigate these changes. For buyers, I guide you through the home buying process, helping you understand how the rate cut impacts your mortgage options. I'll work with you to get pre-approved at the best possible rate, ensuring that you make a smart investment. For sellers, I'll show you how to leverage the increased buyer activity to your advantage. With more people entering the market, it's crucial to have a strategy in place to maximize your home's value and sell it quickly. My goal is to help you make the most of these market conditions, whether you're buying or selling. Now let's zoom out to the greater Los Angeles market. Right now, the average mortgage rate for a 30-year fixed loan is around 6.53%, while a 15-year fixed loan sits at about 5.97%. These higher rates have been keeping some buyers on the sidelines, but the recent Fed cut could change that. Let's look at how this compares to recent years. Back in 2020, mortgage rates were historically low, sometimes dipping below 3%, making it an incredibly attractive time to buy. Now that rates have more than doubled, it has limited some buyers' purchasing power. For example, a buyer who could have afforded a $1.2 million home at a 3% rate is now looking at homes around $900,000 with the same monthly payment at today's rates. But with this rate cut, even a 0.25% decrease could save you around $67 per month on a $300,000 loan and even more on higher priced homes. Over the life of the loan, these savings add up. For those considering a 15-year loan, although the monthly payments are higher, it's a great option for building equity faster and saving on interest. For instance, on a $500,000 loan, choosing a 15-year loan over a 30-year loan could save you over $100,000 in interest. Lowering your mortgage payment isn't just about the interest rate. There are several strategies you can use to make your monthly payments more manageable. First, consider increasing your down payment. The more you put down up front, the less you have to borrow, which means lower monthly payments. For example, putting down 20% instead of 10% on a $1 million home reduces your mortgage by $100,000, potentially saving you a few $100s a month on your payments. Another option is to adjust your loan term. While a 30-year mortgage has a lower monthly payments than a 15-year mortgage, you'll pay more in interest over time. If your priority is to lower your monthly payment, spreading it out over a longer period could be beneficial. However, if you can manage a slightly higher monthly payment, a 15-year loan can save you a significant amount of money in interest and build equity faster. Buying points is another strategy. When you buy points, you pay a little extra upfront to lower your interest rate for the life of the loan. Each point costs about 1% of your loan amount and can reduce your rate to about 0.25%. So on a $500,000 loan, 1 point could cost you $5,000 up front, but could save you thousands over the life of a loan in lower monthly payments. It's a trade-off between paying more now to save later. Refinancing is also an option if you're an existing homeowner. By refinancing at a lower rate, you can reduce your monthly payments significantly. Just make sure to factor in the closing cost and how long it would take to reach the break-even point. If the numbers work in your favor, this could be a smart move to free up some cash flow each month. By having these conversations with your mortgage agent, you can make a well-informed decision that aligns with your financial goals. The right choices now can save you thousands over the life of your loan. So take the time to explore all your options and make sure you're getting the best deal possible. So whether you're buying, selling, or just curious about how the Fed's rate cut affects you, let's talk. This market is shifting, and with the right strategy, you can make it work for you. Reach out to me. I'll be more than happy to help you secure the home of your dreams or sell your home to get into your new dream home. Be sure to like, subscribe, hit that bell, stay informed, because I'll be dropping videos like this all the time. Very informative. And people, please remember, stay consistent, keep grinding, and everything will fall into place. Peace.